Hey, how's it going, guys? This is Kyle from InvestiShare. Yesterday's target ended up being hit. However, there was a bit of turbulence along the way up, so it was a struggle for even like professional traders to be able to take action on this and escape with profits. I basically broke even yesterday, so I'm not going to pretend that it was a profitable day for me, but I basically broke even because there was two attempts to try to get to the target. We had two windows to try to get there, and both those windows that I've taken during my trading session that I like to trade in, it just didn't play out. So I'm gonna go through the trade that we did yesterday and what kind of actions I've taken, and then I'm gonna tell you about what to prepare for next, because right now, based on the price action and the structure that we're forming, it's looking like it's actually gonna be bearish. So I guess I better turn on the red light. Oh boy. Okay. Let me just get this going again. I'll get this right eventually, guys. Don't worry. So let's dive into the charts. I'll show you what I'm preparing for and what to look out for in terms of the bearish case scenario and the bullish case scenario and how you can take action on both. So let's dive into it. So this is the 15-minute time frame for Bitcoin. So this is the current structure that we're looking at. Let's look at first yesterday's price action. So we were preparing for a break of this downtrending momentum, and we got the break at the value area low, right? Where you should mostly be preparing for longs. We kept acceptance inside of the value area, meaning we didn't go down below. If we did go down below, you would have to wait for acceptance inside of it in confluence with the change of character. Yeah, during this example, we basically stayed above it, and I took action, in my opinion, I would say a little bit too early. So we got the change of character here. I go off of the full body acceptance of a candle. So we have this full body level of resistance here, and we got this candle close, and then during that moment, I entered the long position, and then we consolidated against a sell wall that appeared the moment that we pretty much entered. So a lot of people were preparing to sell at this moment. They're probably people that somehow caught the knife down there, and the market makers were like, yeah, we're going to let it linger for a bit. And then eventually it failed. In the lower time frames, you would see it as a pennant that broke to the downside. There's some people that got stopped out during this moment, depending on the exchange that you chose. Like if you're using an exchange with a lower amount of liquidity, this could have been a much bigger wick. So I really recommend making sure you pick the right exchange with a safe amount of reserves that you can track and have a large amount of liquidity, so there's less wicks that could go against the rules of your strategy. So yeah, I ended up actually getting stopped out during that moment, and it was by like $1 or so. So I feel like the market makers are watching me on YouTube now, and I appreciate you for subscribing, but don't hunt me down. Anyways, so the second opportunity for an entry, I jumped in on as well. This became the area of interest that we were watching, this little horizontal level resistance. And when we got that candle close above it, we broke that area, and we ended up watching the point of control act as a form of resistance, and people were preparing to sell. We saw it in the order books. So I took half out and then evolved my stop loss to the active VWAP, which is this line that you're seeing right here, this orange line. What the VWAP is, for anyone who doesn't know, it's a moving average that takes the data from the daily time frame. So you'll notice whenever a daily candle closes, it takes the volume weighted average of that day, and so it'll snap back to the current price action the moment that the daily candle resets. So if you're anyone who's struggling with like constantly having to zoom out or zoom in to the different time frames between the daily and what the daily is doing, the VWAP kind of gives you an insight of what's going on in the daily and when the next daily candle will close. So this is like the beginning of the daily candle session right here. Here's another example, snap back right here. So this would be an entire day right here of trading. So I hope that helps you out, but basically it's a tool that helps you find a location of support and resistance, so you just got to prepare for it, and it kind of acts like a magnet. But anyways, yeah, close about half here, move for stop loss below the swing low relative to the VWAP as well as a guard, and took half out and got stopped out at a profit because the amount of profits I've taken was half the account value. So basically the profit outweighed the loss during that moment. But overall, that day was pretty much break even. Then we ended up pumping up and hit our target. This is would have been a great moment to prepare for short. When we got to this target, I could switch to the 5-minute time frame. For the lower time frame traders, it would have been pretty transparent. So this is the uptrending momentum. The fixed range hasn't updated, but it's where this red line is here. That's the value area high. When we lost the value area high, in confluence with the double top and the downtrending resistance and the bearish divergence and the confirmation, it would have been a great short. You would put your stop loss there and you target the value area low, and every time you got a new low, you put your stop loss at that new low, above the recent high, right? Every time you get that new low, you can evolve your stop loss, and then you can watch the momentum as it develops to see where you should be getting your exit out. So your goal is obviously to try to take profits at your target. But if you're greedy, this is a tool that this is a cool way of saying, start listening to the market and get out, because it'll go against you, not always this quickly, but it can go against you pretty quick. And you want to make sure you're capitalizing your gains and making sure that you're honoring your take profits. So when you take those gains, they will outweigh your losses, right? Anyways, so this is what we're preparing for next. So we have price action actually relatively steeply coming down to the value area low right now as we speak. And the bearish case scenario is becoming more transparent because you can see we have this downtrending resistance being put into play. When you see this happening, what's basically happening is the moment you get that lower low at this point, you can start drawing a downtrending resistance, and you can look at the order books to anticipate if it's going to be honored like it was right here. And we saw that this morning when we were doing our trade hunting call, that there was a large sell wall like right at this resistance here. And it ended up pushing the price right down as people were reacting to it in confluence with the value area high and the resistance. There's a lot of confluence saying that it's going to go down this area, but the order books is the most important part because you know people are taking action off of it. And for those of you who don't know what the order books are, it's this tool right here. You can see that there's a big buy wall right where that green dot is. At 62,910, there's over 1,000 Bitcoin ready to be bought at that price. So that's a buy wall. And we saw a giant sell wall at that price, so we knew that the price is going to be honored as resistance. So what we could do is we can mark these levels on our chart as we trade and prepare for them to be honored as support. So people try market selling against it. It's going to create a wick as it pushes the price back up. So at 62,910 is right about here, right? So this is where people are preparing to buy. And this could be a market maker trying to manipulate people to undercut them in a sense. Or it could be a bunch of traders at once trying to create a floor, because we know we have horizontal support here and people are constantly honoring it over and over again. So there's a lot of buyers anticipating it for it to be honored as support again. And they're trying to get a better price below the value area low. And this order book could cause a bounce here. And if we break momentum and we have like a double bottom as a result from that floor, and we get acceptance back inside the value area, we can enter along so long as the risk to reward ratio is safe, because we're starting to get squeezed and we have a very little amount of time left inside this value area. So we're getting a warning sign from the structure saying that we might not be able to range trade this in this area for very much longer unless we break to the upside. If we break to the upside, then we can range trade in this a little bit longer. But if we break to the downside, And say we go through that wall, we bounce from it, but the value area low acts as resistance, and then we create a new low, then we can enter a short, putting our stop loss above that swing high. And what I'll be looking for is this area of demand right here. So we have at 61,450 a relatively strong level of previous support and resistance. We can go back in time for a while and we can see that it was constantly honored as support and resistance in the past. So we can target that as our level, but we have to be very cautious along the way down of the structural value area low here at 62,360, and the fact that we just broke downtrending resistance and it could give us a opportunity for a stronger support bounce. And then on the higher time frames, you'll see it as a bounce and a higher high, and it'll bring us to levels like 70,000. If this were to occur and we honor this as support and we get a higher high, we're definitely likely going to get to the structural point of control, which is at 67,000. And let me go to the 4 hours so you can see what I'm talking about. Right? So we get a bounce off of this level and a higher high. Then we'll be focusing at something like the value area high as our target for a more macro value area trade. We can do all these little micro trades, but on a separate account, we can have a macro trade, like a swing type style trade, and we can measure our risk off of that and target this level if we get this play out the way we want it to play out. That is pretty much it. But if I zoom in on the 15, there is one thing we should watch as well to come in confluence with this. Let's go over to the liquidation chart. So this is the weekly liquidation chart on CoinGlass. I'll include a link down below so you guys can see what I'm seeing. But right here, this is the heat map. So the more closer it is to the like yellow, it's a larger impact relative to all the liquidity that's currently on the market. And we have a high impact amount of liquidity currently at 60,990 all the way down to 60,920. So this is a really, really important area to watch because market makers love to hunt for liquidity. So they might come back down to these low levels before potentially going back up or continuing to go down lower. So I marked it on my chart here for you guys as a purple line here. So we have this area of demand that we can watch, but we should watch out for a potential wick coming down to here before potentially recovering and building a new structure. And then this structure will tell us if we're going to continue to go down or if we're going to go back up. But yeah, so that's what I'm preparing for the bear scenario. So if we get this buy wall eaten that we have here and we bounce, come back down, use it as our stop loss guard, and we can target as low as these levels while being very, very mindful of these two levels here along the way down. But we're starting to see volume coming down now. So we just need to see it come back up and retest because we don't have a decent stop loss guard. If we were going to use a stop loss guard right now, it's way up here and our target's right here. So it's not even a 1 to 2. And we want to make sure that we have a consistent 1 to 2 risk to reward ratio. So we have to depend on a bounce and rejection. And this is what's going to make you patient as a trader to give yourself a good stop loss guard. So we have an invalidation point where basically you need a change of character to tell you that if we get the change of character, we break that level of resistance that we just created from that confirmation, then we can enter that short to protect our stop loss. Because your goal as a trader is to protect your capital, to allow it to grow and compound and compound. So your next trade's worth more than the next, and so on and so forth. So this is the bear scenario. We have a couple barriers to watch. And the bullish scenario is basically us staying inside the zone for a maximum of 12 hours, roughly. Right? We got about 10 to 12 hours. I don't see it getting squeezed all the way down through here, but because especially with the amount of accumulation that's going on in the background. Yeah, if this breaks to the upside, we would enter along with a swing low guard, hopefully with a confirmation bounce, and watch these levels along the way up. And it's in confluence with the point control and the value high as potential barriers as well. But that's pretty much it, guys. If you have any questions about this, you can reach out to me in the Discord, and have yourself an amazing day. And I really, really appreciate all the people that have been subscribing. It's crazy the amount of growth that we've been having in the past week. Like, we went from 1,400 subscribers, and now we're at 2,100. It's bizarre. So again, I really, really appreciate all the subscribers, and you have yourself an amazing day. Bye.
Hey yo, I'm all about the crypto. In case you don't know, it's the haste of inflation, the crazy sweep on the nation. No baby, every blockchain ain't created the same, but the learning curve feels like a bullet to the brain. Let me enlighten you, let me enlighten you. React to the max and we'll turn to a fire.